Folks, we need to talk about Bill Ackman, Graham Stefan, Cody Sanchez, Daryl Fairweather, Bitcoin, Spotify, that and much more. But first, let's acknowledge this live session is going off 1 hour early, folks. Yes, we are recording this at 6:30 in the morning because I have some exciting interviews scheduled for later, and I wanted to make sure we got this done. That's just how we roll here. So first, let's jump into what Bill Ackman has to say. Folks, if you don't remember who Bill Ackman is, obviously one of his most recent calls was shorting the 10-year treasury, and then he covered that short position at 5%. Looks to be a tremendous trade on his behalf. Now he is saying the Fed must cut rates in Q1. The real rate of interest is rising as inflation falls. Folks, we've talked about this a couple of times. And remember, what is he really saying? He's basically saying we need to watch the real rate. What is the real rate? Take the Fed funds rate, which today let's call it 5.25, and you subtract inflation, let's call it 3%. The real rate is then, in that case, 2.25%. What Bill Ackman is saying is inflation is falling much faster than the Fed is letting on, and that the 2.25 will continue to expand, aka be more restrictive, and thus the Fed will cut rates. If the Fed is at 5.5, this is his words, and inflation goes sub 3, we will see the restrictive nature of rates. So again, Bill Ackman is pretty adamant that the Fed is on the cusp of starting some rate cuts. And again, this isn't cutting rates because the economy is soft. This is cutting rates because inflation is falling. That is a very nuanced opinion. I think a lot of folks, myself included, kind of lean towards the Fed will cut rates when a recession comes. But I want to acknowledge that it is absolutely possible that the Fed looks at falling inflation and goes, hey, we want to maintain 225 basis points to make that restrictive nature. That is possible. Now, does that happen in Q1? Seems kind of early to me, but let's not get it twisted. Bill Ackman has made some tremendous trades, some tremendous calls, and he, for one, talking about the Fed cutting rates in Q1. How about Graham Stefan? Graham Stefan put out a great video the other day talking about moving from the middle class upwards, right? Go from middle class to upper class. Graham Stefan broke those into four key steps. So I thought I would share them with you and give you my opinion on them. Step one, Graham Stefan talks about your credit score. This is kind of like what Dion talks about all the time when I talk about getting wealthy being 3 steps. Dion is always like, Michael, you're missing one. And according to Graham, I'm missing one. So 2 smart guys, I'm probably missing one. But basically, you have to lay the foundation for personal finance. And the best way to do that is the credit score. Do you know your credit score? Do you know what impacts your credit score? Can you improve your credit score? Because again, the higher your credit score, the better interest rate you will receive on debt. And again, as you're moving forward, the better your rate, maybe the more cash flow, the lower expenses, all kinds of good things could happen. And more importantly for me, as I think about what Dion tells me and Graham is telling all of us, it's something you can work on today. How many of us want to get moving and start, moving and shaking and getting deals done, but don't have any capital? I think as Dion has talked about, and now Graham is kind of, poking me, I think they're right. We need some activity or some action that we can execute as we get on this slow grind to what is in step 2. Step 2 for Graham Stefan is you need to save some dollars. This, to me, is what I call step 1, the discretionary income. You have to set up your lifestyle, your monthly expenses, where there is money left over. You can call these discretionary dollars. You can call them working capital. You can call them whatever you want. You need to be able to have money at the end of the month. You need to be able to find ways to grow that, because that becomes the seed capital for everything else. So again, step 2 is save dollars. Step 3, again, my step 2, I'm starting to really think as I run through this with you real time, I need to change my 3 steps to 4. I think Graham is right. Dion was right. Graham has really made it obvious that I failed. I really should add a step 0. You need to invest. Now, I talk about finding your thing. Rest in peace, Charlie Munger. He was the first one who brought this up to me decades ago. It's not about diversification when you get started. It's about getting hyper-focused on your thing. What are you uniquely good at? What are you uniquely excited about? What are you uniquely willing to invest endless amount of time and hours in so that you have a disproportionate return on it? I call it, or Matt the Lumberjack calls it, being elite. What are you willing to become elite at? For me, I had a buy box. It was a zip code. It was a product type. It was 3 or 4 bedrooms. I knew that product mix better than anybody else on the planet for several years running. What is your thing? That is number 3. And then number 4 from Graham Stefan, think long term. I get more specific. I say think in a decade. Getting wealthy is remarkably easy, but you have to think in a decade. This is not ramen noodles. This is not microwave. This is not get rich easy. This is none of this stuff. But it's get rich for sure. If you execute these processes, I like your chances. So that's what we got from Graham Stefan. Shout out, Graham. Cody Sanchez. I really like Cody Sanchez. I think she's doing great work. I think she is authentic. I think she has a way of communicating that is superb. And what I just watched from Cody Sanchez is she was talking about the 4 levers and the 9 income streams she had before she left her W-2. Why is this important to me? I'm starting to believe that my avatar is full-time employees, right? We just had a great conversation with Jason Pritchard yesterday. I think the video went out yesterday. It might go out today. Talking about being an entrepreneur like him, where you burn the boats, or you're a full-time employee like myself. You can absolutely burn the boats, quit your job, and go after it, and good things could happen. But that's not for everyone. In fact, I would argue that's not for most people. Most people, I believe, need to look at their day job as a tool. I know lots of you hate your day job, but what if you flip the mindset and you said, you know what, I'm using this day job to get wealthy? You might look at it a little different. So again, to give you this kind of the synopsis of what Cody was talking about in her video, the 4 levers that we all get to play with. One is time, right? If you don't have a lot of money, but you have time, find a way to use time to get some education, knowledge, all of that. Number 2, expertise. What are you uniquely good at? Number 3, brand. Build a brand or an audience. Number 4 is obviously money. But here's the deal. This is why I watched the video with Cody, was the income streams. I believe if I had to do all of these things over again, I would do 2 things remarkably different. One of them, I've already admitted. I would have house hacked a 4-plex in Sunnyvale or Santa Clara, California in and about 1992, 1993. I would have owned a 4-plex, owner-occupant, house hack. That I've admitted to you, that I would have done. The second thing I would have done, as we're on our journey, right? You've read my book, One Rental at a Time. Thank you for the selfies, the book reviews, all of that. About year 5, I would have started building the brand, One Rental at a Time. I would have done stuff, right? At year 5, we had about 80 units. I would have done stuff. I had private money. I'd survived the crash. We were starting to do, raise millions of dollars. I would have taken what was wealthbuildingpro.com, what was my writings on Bigger Pockets, and I would have made a brand. I was doing the work, but I wasn't thinking brand. The reason I'm bringing this up, because again, Cody Sanchez is talking about, hey, what can you do while you're working to set yourself up. Because again, remember, I quit on a moment's notice. I have a couple of great days and then I get depressed because I have nothing. But what if I had been building one rental at a time for 10 years and then quit on a moment's notice? I wish I would have done that as well. So again, what are the 9 income streams Cody Sanchez had? She had started a service-based business. Basically, she took what she was doing in South America and turned it into a consulting gig for others. Number 2, she obviously had her 9-to-5 job. Number 3, she was consulting. People were paying her by the hour. Number 4, she was sitting on a board. She was known in the industry. She sat on a board. Number 5, speaking events. She was being paid to speak on certain topics. Number 6, she created an info product. Number 7, newsletter affiliate. Number 8, sponsorship on products. And number 9, she has Airbnbs, laundromats, things of that nature. Again, these are Cody's 9. I share them with you not because you should copy Cody's 9, but I challenge you to think of all the different income streams you could create while working around your set of expertise. And again, if I had to do it again, I would have started building one rental at a time, the brand, right around 2009, 2010. That would have given me, 8 years to build the brand while working. Huge opportunity I missed. Daryl Fairweather. Do you know who Daryl Fairweather is? She is the chief economist of Redfin. She is looking at the data and says, if rates fall below 7%, I think we are going to have a pretty strong year. Again, this is the problem. This is what I've been highlighting is the risk. I've been highlighting this for months. This started with Lance Lambert at Resi Club. When we talked about home builders, home builders started backing off. And I'm like, dude, this is going to be a future problem. In and about February or March, we are going to have less new homes available. We're going to have rates come in. And then, oh, by the way, there's going to be all of this pent-up demand. I am very concerned that starting February, March, April, we get back to bidding wars. To be clear, I don't want it. I don't want that. Some people think that I'm some housing bull. I'm not. I just want it to be flat. Let this thing be flat for a while. Let's wring out all the excess and let's set up a more healthy market. But it is possible. The other thing that Daryl highlighted that was new information to me, 37% of home owners believe it is a bad time to sell. Interesting. Now, could that be high rates because sellers are usually buyers? Perhaps. Could that be that there's no qualified buyers? Perhaps. But the fact is, sellers think it is a bad time to sell. Right now, there is 4.2 months of supply, which is the highest for several years. But we got to remember how the 4.2 month supply is calculated. It is a supply and demand variable. What are we seeing right now? Demand. 8% stop demand. Hence, months of supply goes up. Hence, days on market go up. But what will months of supply be in February if we have a 6 3/4, not a lot of supply is coming, and demand goes up? Folks, that 4.2 months will crater to sub 3 months. But we shall see. Let's talk about Spotify, Bitcoin, and Alaska Airlines. We'll go in reverse. Alaska Airlines first. Folks, Alaska Airlines appears to be buying Hawaiian Airlines. How's that for a combination? Go up there to freeze, go out there to warm up. Alaska Airlines for $1.9 billion. That's quite the purchase. Let's talk about Bitcoin. Bitcoin's kind of interesting. Last night I wrote down Bitcoin crossed 40,000. I had to cross that out because now Bitcoin has crossed 41,000. It is very likely, I think, that Bitcoin goes down as the #1 asset for 2023. I think it's up like 120% or something. So, hey, for all of you people out there still holding on to that Bitcoin and Ethereum, congratulations to you. And then Spotify. I don't know if you saw this, but just this morning, Spotify says it is time to right-size the organization. they are laying off 17% of their employees. So again, folks, as people get into the end of the year and realize they have too many employees, you are once again seeing some significant head count reductions, 17%. Again, folks, remember, we do now have the $99 virtual option. I did sign up to spend about $12,000 to get two people, two cameras, I don't know, something else, so that we can host the virtual event. Everything in Vegas costs a gargantuan amount of money, but I think it will be worth it because I know a lot of people couldn't get there. So again, we are hosting the virtual event. It's on Eventbrite. Eventbrite will send you a Zoom link so that you can watch the fun. I know you won't be able to network. I know it won't be the same. Hence the cost is only $99. My intention, just so I'm clear, my intention is to record the session. I have been doing this a while, and sometimes best intentions don't work out. My intention is to record the 20-hour event. We will then take that 20 hours. My team will chop it up and load it on Teachable. And then my intention is to give it to anybody who signs up for the $99 virtual event. That will probably take a minimum of 2 weeks, but could take 3 weeks. What you don't know about Teachable is it has a file size, and there will be lots of videos to load or create for the 20 hours. So again, it is my intention. And the reason I say my intention, because I can already envision, oh, this flash drive or this hard drive or whatever crashed, and then I'm SOL. I can't do anything about it. But my intention, good karma, be a good person, is to record it, hand it to my team to chop up, load on Teachable, and then give away. So again, if you buy the $99 virtual event, my intention is to give you the recorded version once it is done. And then finally, for the folks in the boot camp, we got 3 more days. We are going to do day 8 of our 10-week boot camp this Saturday, 8 to 10 a.m. We're going to talk about out-of-area and out-of-state investing. We're also going to just answer generic questions about the spreadsheet and anything else you want to bring to bear. The one and only Millennial Mike will be joining us for out-of-state and out-of-area discussions. I hope to see you there. I will be sending out the invite in the next 10 to 15 minutes. Folks, take care. See you at the boot camp Saturday, 8 to 10 a.m. And again, please book the virtual event if you want to go. We've had, I think, 4 people sign up thus far, and hopefully we get at least 130 or so. That will make it about a break-even thing. So at the end of the day, folks, take care. Have fun. Bye.